The trade in focus. We learned this morning that U.S. and Chinese trade negotiators will meet again in the United States for the next round of trade talks. That happens in September. Talks in Shanghai wrapped up this morning with no sign of a deal, no major breakthroughs, although they were talking about China buying more agricultural products. U.S. Trade Representative Robert Lighthizer announced more exclusions to 25% tariffs on $50 billion worth of Chinese imports. Joining us right now is Hudson Institute Chinese Strategy Senior Fellow and Director Mike Pillsbury, along with Dalton Investments Co-Portfolio Manager Jennifer Lai. Great to see you both. Thanks so much for joining us.
Thanks for having me.
Mike, thanks for being here. Let me get your take on what went down in Shanghai, and are we any closer to a deal from your standpoint?
What I see is the Chinese side of the story. I try to follow their media, talk to their delegations, visit them in Beijing. Unfortunately, they have lost their sense of panic that they had about a year and a half ago, that this whole thing might really hurt them. They now see themselves, Maria, as 3 times faster. They're growing 3 times faster than we are. A small slowdown doesn't really affect that. Number 2, they see weakness. They don't understand why the president has not put Peter Strzok and Lisa Page and these people in jail. In China, you instigate a campaign against the President Xi Jinping, you'll be in jail quite quickly. So they see him as a weak president. You add into that, there's all this praise for Steve Mnuchin and this demonization of Bob Lighthizer and President Trump himself as being too tough. So I'm kind of turning pessimistic now that the president is right. President Trump is quite right. They're just looking for the next president, which they hope will be a Democrat.
Yeah, and all of that, 2-year nonsense where everybody's head was on fire, that there was collusion between Donald Trump and the Russians, I guess gave them more firepower to think, I'll be done with this guy in 2 years.
That's right. They don't understand why a lot of Chinese involved in these talks have master's degrees or PhDs from American universities, even the ones Peter Thiel calls exclusionary. They watch our politics very closely. They watch your show, Maria. So they've got a sense of a weak president. They thought he was going to go to a full 100% tariffs on all Chinese exports to America. He didn't do that. Even Chuck Schumer, back in May, I think it was, no, in March, Chuck Schumer had a tweet saying, Mr. President, you need to put all the tariffs on all of China's exports. So he looks weak even from the point of view of Chuck Schumer's tweets. This is not good.
Meanwhile, there's a lot of propaganda out there about China's economy. Jennifer, we saw Huawei saying that it's gained market share, had a great first half of the year. Should we buy into this? And is there an investment play in any of this?
Well, we've put money into work in China, not because of the overall view on the trade talks, but rather from a bottom-up perspective. There's a lot of interesting opportunities to be had. In China, the GDP per capita has risen 28 times over the last 30 years. And so that creates a lot of wealth. It's been the fastest creation of consumer wealth, basically in human history. And so that makes a lot of opportunities in the consumer space. We like investing in consumers that play where consumers are spending more money on goods and services and experiences. And from a bottom-up perspective, we're still finding a lot of cheap stocks that we can put money to work in. We also like aligning ourselves with entrepreneurs, meaning investing in entrepreneur-driven companies, not state-owned companies, because we know that entrepreneurs, they've typically been more efficient and more profitable in terms of running their business.
So what about the Fed rate cut that we're expecting today? How important that is to the investment thesis in China or even the emerging markets in general, because it helps their currency, and then the Chinese government doesn't have to get in there and continue to manipulate it?
Yeah, I think rate cuts are good for the markets overall globally, and so that's the case for the U.S. rate cut effect on China as well. Look, I think, our economy has been very strong, though. I mean, unlike other countries that are easing, like the European Central Bank or the Bank of Japan, our economy is already in a much stronger state. And so maybe we don't need those cuts as much, but they would certainly help markets.
Michael, here's Matt Murray from the Journal.
Mike, good to see you. I want to go back to something you said a minute ago about waiting for the Democratic president possibly in China. The Democrats have not exactly been too critical of President Trump on some of the China behavior. In fact, some of them have been raising their own issues, as you said, with Schumer. Did the Chinese just assume that and should we assume that whatever happens in 2020, we're in a different world now of tariffs and our relationship with China, that we're moving toward at least some kind of moderate decoupling? Is that how the Chinese see it? Is that how we should see it?
Well, I think there's been a reduction in the sense of panic in Beijing that you saw a year and a half or 2 years ago. Yes, there's been some decoupling, but a lot of it, like Samsung moving so much of its cell manufacturing to Vietnam, other companies moving into India, it's not the kind of mass panic that the Chinese were afraid of. It's very small percentages are decoupling. So if you're a Chinese analyst talking to President Xi Jinping about how long can we go on, how long can we take this trouble from America, you're probably pretty optimistic that with an economy growing 3 times faster than the Americans, that's about 60 or 70% of the size of the American GDP. The Chinese are pretty optimistic at this point. So I just don't see them making the same kind of concessions that they apparently made by May 1st, where there were legally binding agreements in writing. They seem to have backed off the legally binding part. Now they want guidance and normative, what they call normative suggestions. They also have a story to tell that they're making these reforms themselves in foreign investment and intellectual property courts being expanded. So this seems to be their strategy, that President Trump is not as, how should we phrase this? Steve Mnuchin, they see as a better partner for China, and they see him more and more in charge of these talks, Maria. They don't see they don't see Bob Lighthizer as being in charge anymore. They really see Mnuchin as the guy.
And that's who they want in charge,
yes.
I guess. And real quick, what was your assessment of what went down in Shanghai? The talks have ended now, right? And now we're looking towards September for the next round in the U.S.
Yes, they were supposed to be for 2 days, Maria. They only were 1 day, really. And the choice of Shanghai just makes it much further for us to fly. And there's this strange analogy they seem to have in mind that Nixon and Kissinger made these huge concessions in Shanghai in 1972. So this is the place to get American concessions. Shanghai is the place where Americans surrender. We gave away Taiwan in those talks. We said Taiwan is no longer a country. That's still the case today. We don't recognize Taiwan as a country at all. So they were apparently thinking this magic of Shanghai would affect the American team as well.
Meanwhile, the U.S. is selling arms to Taiwan, and that's not gone.
No, there's been a hold on that, Maria. No. The tanks are going, but the F-16s are not approved unless the president changes his mind.
All right, we'll leave it there. Mike, a lot to come. You got to come back soon. Jennifer, please come back soon. We appreciate you both joining us. Mike Pillsbury, Jennifer Lai joining us.